I wanted to talk more on the BRICS meeting, but also, what do you think is going to happen, or how is silver's price going to be affected by the BRICS meeting and the November election?
Well, I mean, in general, I think all things not dollar will benefit from this continued de-dollarization and from this continued move away from accepting the dollar as the sole settlement currency for everything. One of the things that we continue to witness are bilateral deals that are being struck which usurp the dollar. And it's not how does gold and silver do in particular. I mean, over time, what I really think is what's happening is that the dollar is losing ground, losing value, losing credibility, and therefore, in the face of a falling dollar over time, ultimately, I see gold and silver going markedly higher. But what we've been seeing really is massive deliveries coming off of all of the exchanges using the Western suppression to run cover for it. And we talked at length about what's been going on in Shanghai and the LBMA, where the LBMA is trading upwards ends of 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, nearly all of it naked or paper contracts that were created out of nothing, just the ability to control the price. And that worked for a very long time, for years, decades, because the countries around the world were those that were sophisticated and coordinated and wealthy were on the side of the West. Those in the global southern hemisphere, or these other countries that we now call the BRICS, largely were not coordinated, sophisticated, wealthy enough, or had any desire to stand for delivery. These countries, if anything, were worried about their own affairs, and most of these countries would invest in the U.S. infrastructure because of its stability and its potential in stocks and bonds and real estate. And look, let's face it, this country still is the greatest in the world, but the opportunities for investment that we saw in go back 40 years to 1982, and you see interest rates that have fallen at a 45-degree angle for the whole way down. Falling interest rates then is the opposite of that, would be rising asset prices, stocks, bonds, and real estate. In the face of falling interest rates, it became a wonderful place to invest and to park money. Safe, prosperous, opportunity laden, rule of law, all of the things that you would want seem to have kind of gone by the wayside, or are changing dramatically in a rising interest rate environment. And just as bullish as that environment of falling interest rates and easy money has been for 40 years, the opposite will hold true in a contraction of credit and rising interest rates, which I believe will happen as banks continue to get beat up. In commercial real estate certainly being a good example I talk about all the time. The former One AT&T Center in St. Louis, 43-story tall building, third or fourth largest building in St. Louis, sold for $205 million in 2006 and just sold for $3.7 million. $3.7 million. And then I just got one just now from the Pickaxe Silver Academy, John Little, and he's great. He's a great researcher. And here he says, this is one of the most insane deals we've seen. I just got this 10 minutes ago. An office tower in San Francisco's mid-market area shockingly sold for 90% less than what it is traded for. The previous owner paid $62 million in 2018 for the 90,000 square foot building. It was recently acquired by Starwood affiliate for $6.5 million, or $72 per square foot. And 995 Market Street is the address. So you think about that. Just a few years ago, it sold for 62 million, and now it just sold for 6.5 million. And this is emblematic of the problem that is no longer the opportunity. And so I think you move away from traditional assets, stocks, bonds, real estate, in a country that is choosing inflation as their way out, that has great instability in the bond market, and has chosen to weaponize said bond market. Coupled with all of the things that are happening in this country, you look around and you don't feel safe walking downtown in any major city at night by yourself. I used to live in downtown Minneapolis right out of college, and I would walk home from the bars by myself, 8, 10 blocks without a second thought. And I don't think it would be wise to do that now. And just about any major city, the lawlessness, the open borders, the election issues, the judicial department issues, all the things that we've talked about ad nauseum on your show for a long time, is coming home to roost. And I guess what I mean by that is the opportunities that were found in investing in traditional assets in the U.S. are changing now and moving more towards commodities and repatriation, removal of counterparty risk. You look to the Bank of India as an example, who purchased 24 tons of gold, if we believe those numbers, probably more than that, but 24 tons of gold in just the first 4 months of this year. That's 1.5 times more than they did in all of 2023. They bought more silver in Q1 2024 than in all of 2023. They've bought nearly 700 million ounces of silver in the last 3 years. That's 12 times more than is in the COMEX registered category. But equally as interesting is that the Bank of India moved over 100 tons of its own gold from the UK, the Bank of England, to India for the first time since 1991, and they hold almost all of their own gold in their own vaults right now. That's an indictment of the system. The indictment is all of these nations used to leave all of their gold either in the Bank of England, which would give them immediate access to the LBMA, or just like we saw 2 weeks ago, Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia all brought their gold home from the New York Fed, which gives immediate access to the COMEX. And let's not forget, in 2017, we saw the same thing. The Bundesbank from Germany, Bank of Austria, Turkey, Hungary, Poland, Czech National Bank, Dutch National Bank, they all brought all their gold home from the New York Fed. And all of these entities have been buying massive amounts of gold and silver, to where the first quarter of 2024 was the largest purchasing first quarter ever by central banks, only surpassing first quarter 2023. So yeah, we are seeing a drive to accumulate commodities and repatriate them in the face of greater risk and declining desire to own US-based assets. So what do I think will happen? I think it will only bring much, much higher prices for the metals. But let's talk about your specific question in another way as well, and that is the question about the BRICS. There were two meetings that we saw just over the last few weeks in Russia. You know, we talked a lot about the the ultimate de-dollarization and this common settlement currency. And we talked about the 200 meetings in Russia that lead up to the big BRICS meeting in October. Well, there were two that I want to focus on. The first one happened 2 weeks ago, and it coincided with the G7 meeting. And right around the time that Saudi Arabia did not re-up their exclusivity deal with the U.S. and the petrodollar deal that made such big headlines, the crown prince of Saudi Arabia was invited to the G7 meeting in Italy, and he turned it down. Sorry, I got busier things to do and other plans. But he sent his delegates to the meeting in Novigrad the same week, where 21,000 people attended from 139 nations, where $78 billion in bilateral deals were signed on the sidelines, meaning we trade in each other's currencies, not in dollars, where 59 nations, it was revealed, plan to join the BRICS. 59, that's on top of the 10 we already have. You're talking the majority of human population, larger swath of GDP, of commodities, of military might, all of the things that are needed to build a robust economy and a robust civilization is found in these countries. And, you know, you had a discussion or a comment by Putin saying that the infrastructure, the BRICS payments infrastructure, is actively being pursued through the new development bank, which is I'm going to focus on here in 1 second. And he also said trade logistics and sea routes are a major focus for cooperation. Well, that's no doubt. You look at all these countries that they're bringing into the fold, into the BRICS, and they're either very resource rich and or are strategically located in sea routes or trade logistics. They all dovetail into the Belt Road Initiative and the BRICS and the North-South Corridor and all of these trade routes, which will be permission-based only. You look at the Belt Road Initiative, this massive infrastructure of bridges, roads, and railways and maritime channels. It will only be patrolled by military and commerce. It's not for people to go on a sightseeing cruise in a convertible. It is a series of routes for commerce and trade and be patrolled by military. So it's the real deal. But we go back a week before to the meeting in St. Petersburg, the St. Petersburg International Economic Forum, where Putin gave a speech and he said the Bretton Woods monetary system is dead and gone. And the current one is based on the confidence in the United States economy, period. And this is a big deal. But the things that they talked about were even a bigger deal. There was a meeting between he and the head of the BRICS New Development Bank, and she came out and publicly admitted that this is the case. And we have decided and agreed upon a new settlement currency, in essence. It's called the unit. And Sergei Glaziev was there as well. And Sergei Glaziev was the architect of this whole deal. And it's been 3 years now that he has been talking about a basket of local currencies mixed with a basket of commodities to be this new settlement currency, if you will. And it's something to ponder because, you know, what would a basket of commodities look like? What commodities are we talking? Wheat? Are we talking oil? What are we talking? Now, remember, gold was reclassified as the only other tier one asset in the world, right, by the BIS. And the central banks are buying gold off the chain, and they're at the same time repatriating it all, right? Well, it's been determined that this new currency, which they call the unit, it's the name of it, will be a basket of 60% currency of the BRICS plus nations and 40% gold, period. That is what they just came out and said. And the BRICS the head of the New Development Bank said this, echoed it. And so they also mentioned Project Enbridge. Project Enbridge is the deal that we've talked about at length for the last couple of years. And it is a project that was designed now for a few years as a collaboration between China, Hong Kong, Thailand, and the United Arab Emirates. They developed this cross-border payment system. And I guess I would say that commodities are being remonetized. And I've said that for a while now, where, you know, gold is more valuable than the dollars that purchase it, as is oil, as is silver. And all these commodities, you look at the deal as oil as an example. The largest airport in Iran is being modernized by China. They won the contract. They're paying for it in oil. It's like $3 billion in oil. And the first two trades, the test trades that were done on Enbridge, were done in 2023. The first one was for oil. The second one was for gold, with United Arab Emirates and China using central bank digital currency, the digital yuan, if you will, purchasing it over Project Enbridge, which is a cross-border digital payment system that sidesteps the SWIFT system, which is what the West uses to impose sanctions. So she said, she being the head of the BRICS New Development Bank, and Putin said that Project Enbridge would be key in all of this, whereby these countries will be able to retain their autonomy and have their own central bank digital currencies in doing these bilateral deals, but everything will be settled in the new settlement currency, the unit. 40% gold, 60% basket of BRICS plus nations. It's getting real. And yet the West does zero job of reporting any of this stuff. But you can go right to, there are several places that will talk about this, including the Chinese website, their own government website, which talks 50-page report on Enbridge that talks about this. Or go to the BRICS New Development Bank and Google the unit. And this is happening and it's real. And yet the people in this country have no idea what's coming. And so when you get suppression in paper price, that's all the public sees. It's just an incentive for all of these countries to continue to stockpile commodities using the suppression of the Western markets, throw people off the scent by shorting the paper price and gobble everything up that's not nailed down. So ultimately, to answer your question in a very roundabout way, ultimately the price goes higher than anyone thinks possible because it will be at the expense of a dollar that is globally being usurped and forsaken little by little by little. This is a big deal. You can't just, this instant gratification that everyone is enamored with in this country, Bitcoin, Nvidia,
Right.
Apple, that's the wrong way to look at things like this, which move slowly and
Yeah.
methodically. And the little by little, the naysayers are all over it. They disregard it because it takes so long and it's a nothing burger, right? But look at all the things that are happening. And if you look closely enough, the problem is you have to look deep you can't look at the mainstream media, you don't get any of this information.
Right.
And so that's why I would say the little by little by little is very significant, and it is happening. So yeah, it'll have profound effects, to answer your question, very profound effects. And you can see the foundations being laid right now.